Hello fellow investors, I'm Ben and this is GVD Investing,
where I break down the latest stock market news, analyze stocks, and share my investing journey in hopes of making us all better investors. In this video, it's time for an update on one of my favorite Canadian penny stocks, Greenlane Renewables. They just released their Q4 and full year 2020 earnings report today after the market closed, so we'll go through it, see how the company did last year during the pandemic, and what might be in store for the stock in the coming months. Is it time to load up on shares before the stock takes off? Let's find out. Well, what a wild couple weeks it's been in the stock market. Things have been up and down like a toilet seat. For many new investors, especially those focused on growth investing, this was likely your first time seeing your portfolio get whacked. It's not a fun feeling. But, as hard as it can be, I hope you were able to stay calm and didn't panic sell while prices were beaten down. Hopefully you took the chance to scoop up some discounted shares of your favorite companies while they were on sale. For those of you who didn't jump ship, you've probably seen a pretty significant rebound this week. One sector that was hit really hard by the correction was the renewable energy sector. Renewable stocks got hit with the perfect storm. Not only did the market decide it was time for a pullback in growth stocks, the snowstorms and deep freeze across the southern states made many investors question whether climate change is actually happening. Renewable energy took the majority of the blame for the power outages down in Texas, even stocks that had absolutely nothing to do with the power outages. Often, when part of an industry pulls back, it brings the rest of the sector along with it. This is exactly what happened to Greenlane Renewables. The stock had been on an absolute tear from late October through mid-February, as it had shot up over 400% from around 50 cents to just under $3 at its peak. But then the correction hit, and Greenlane fell almost 40% in just 2 weeks. Was the drop in the stock price warranted? Have the fundamentals changed and the outlook is now bleak for Greenlane? Fortunately, they just released their Q4 and full year 2020 earnings report, so we can get a real idea of how things are going and whether or not the recent dip in the stock price is justified. Let's take a look. Okay, so they really don't waste any time getting into this one. The company delivers record revenue in Q4 2020, up 167% from Q4 2019, along with continued sales order backlog expansion. Full year 2020 revenue up over 100% and sets its sight on further rapid growth in 2021. Those are pretty outstanding numbers considering the global pandemic. To increase revenue 167% in the fourth quarter year over year and 100% for the full year, that's really impressive. If we take a look at the fourth quarter highlights, they posted record revenue of $8.8 million, an increase of 167% over the $3.3 million reported in the fourth quarter of 2019. Gross margin was $2.4 million, which was 27% of revenue. That's also a really good margin. Positive adjusted EBITDA of $0.2 million. Net loss of $1.2 million, or 1 cent per share. They had record sales order backlog of $45.7 million at the year end, an increase of over 180% from the $16.2 million reported at the end of 2019. Their sales pipeline grew to over $720 million at the end of 2020 versus $680 million at the end of 2019, which reflects both an increase of more than $89 million in new opportunities and the movement of $49.1 million in signed contracts into the sales order backlog. Greenlane has visibility to more than 180 new projects globally, and given that they're already the global leader, that's pretty impressive. They had multiple contract wins totaling $18 million. The company announced in the quarter a new $7.7 million pressure swing adsorption system supply contract for a multi-site dairy farm RNG project in Florida as part of the Chevron USA and Brightmark LLC joint venture, and a $10 million membrane separation system supply contract for a new RNG project in the US owned by an international energy company. They killed it in the fourth quarter. Those are all really good numbers, extreme growth, great sales in the backlog, lots of new contracts being signed. The most impressive is their revenue increase of 167% from the same quarter in 2019. And if we take a look at their full year 2020 highlights, they had record revenue of $22.5 million, an increase of 147% compared to the $9.1 million of revenue generated in 2019. Revenue increased 101% over 2019. Gross margin of $6.4 million, or 29% for the full year. adjusted EBITDA loss of $1.7 million, net loss of $2.5 million or 3 cents per share. Cash and cash equivalents at the year end was $16.4 million. Over the course of 2020, they signed nearly $50 million in new contracts, including a $17.1 million system supply contract for an RNG project at a multi-location dairy farm cluster in California, and the first commercial-scale pipeline injection RNG project in the Brazilian sugarcane industry. They also had advancement of build, own, and operate business model. The company signed a definitive joint venture agreement with SWEN Impact Fund for transition, which enables Greenlane to provide upgrading as a service to developers and owners of RNG projects in Europe, by offering potential customers the opportunity to replace the initial capital outlay for the biogas upgrading equipment with a monthly fee under long-term contract. As of the end of 2020, the company increased its cash balance with a $26.5 million bought deal offering. Greenlane also successfully uplisted from the TSX Venture to the TSX. That could be huge for the company, as it should provide more stability and give them access to being included in more funds and being bought up by ETFs. The company further strengthened its balance sheet through the early repayment in full, including principal and interest, of its outstanding promissory note in the amount of $6 million, using funds received from the exercise of warrants. All in all, it was a pretty impressive year for Greenlane. This is one of the best earnings reports I've seen in a while, especially given everything that happened in 2020. It's pretty awesome to see that quarter over quarter they're growing and year over year they're growing. If we take a look at what the CEO had to say, our record revenue in 2020 and continued positive outlook for the business in 2021 is backed by a marked increase in sales activity and the emergence and increased scale of market participants in the RNG sector, said Brad Douville, President and CEO of Greenlane. We continue to see large energy companies entering the sector, seeking to secure supplies of RNG, and, as a result, investing in new projects and buying biogas upgrading equipment. Our sales order backlog, which ultimately ends up in revenue, has grown to a record level that is up over 180% year over year, in part because of this trend. Furthermore, we've seen consistent growth in revenue every quarter throughout 2020 and successfully achieved positive adjusted EBITDA in the fourth quarter. The RNG market, and Greenlane's unique position in it, with our product offerings made up of multiple core upgrading technology, remains robust. We've taken great strides to strengthen our balance sheet and position for growth. With over $16 million in cash as of December 31st, a bought deal financing closed at the end of January for more than $26 million in gross proceeds, and in February, repayment in full of the company's outstanding promissory note using funds received from the exercise of warrants, we will focus on investing in the next phase of growth. These investments include adding new employees to keep up with demand for our products, engaging in the development of and investment in new RNG projects, as well as evaluating a number of strategic opportunities that we believe may add to growth of the company. These opportunities may include, but are not limited to, pursuing attractive acquisition opportunities as the industry consolidates, adding system capabilities for hydrogen productions as markets develop, and creating new strategic alliances to expand upon the company's upgrading technology solutions. He continues by saying, beyond financial results, these last 12 months have reinforced the climate change challenge that we face as a global community and the growing shift in attitudes towards action. There is no doubt that the positive momentum around providing green solutions will continue to increase as the world looks to decarbonize. RNG has a critical role in decarbonizing two of the most difficult sectors to decarbonize, transportation and the gas grid, and we are positioning ourselves to take a leadership role, which they already have. If we take a look at the market outlook, 2020 marked a year of uncertainty as the pandemic surfaced and resulted in severe lockdowns as health authorities and governments around the world moved to contain the spread of the virus, devastating global markets and economies. As the world now cautiously moves to recovery, what has emerged is the firm foundation of an energy transition rooted in decarbonization, as companies and governments across the globe set net zero emission targets by 2050 or sooner in the effort to combat climate change. The Biden administration in the U.S. has embarked on its mission to fight climate change, signing executive orders aimed at focusing the climate change crisis on foreign policy and national security while shifting the country away from its reliance on fossil fuels towards sources of low or no carbon energy, which is positive for the RNG industry. Despite a volatile year due to the pandemic, the total number of RNG production facilities in the United States increased by over 40% in 2020, according to a recent assessment completed for the U.S. Department of Energy. Strong capacity growth in the U.S. is anticipated to continue this year and into the future, as an estimated 155 new projects are either under construction or in the planning stages. The transportation industry, one of the most challenging sectors to decarbonize, continues to focus on low-carbon fuel sources. Amazon recently announced it has ordered more than 1,000 compressed natural gas engines, which can operate on both renewable and non-renewable natural gas, as part of its strategy to introduce new sustainable solutions for freight transportation. According to recent data released by the EPA, more than 500 million gallons of RNG were produced for transportation use in 2020, a 25% increase over 2019 volumes. The use of biofuels in marine transportation is beginning to gain traction as well, as the European Commission is launching a legislative proposal on maritime fuels that aims to increase the use of sustainable alternative fuels, including liquefied biomethane, in European shipping and ports. Less than 1% of the world maritime fleet runs on alternative fuels, and liquefied biomethane can provide a decarbonization tool for the sector today. We continue to see the world's largest oil and gas producers shift to net zero emission targets and low carbon energy portfolios. Corporate strategies differ in approach, although a common theme that is emerging is the necessity to increase exposure to low carbon energy sources, including RNG. Chevron, one of the world's leading integrated energy companies, is choosing to concentrate on certain initiatives to achieve a lower carbon intensity where it has existing core competencies and competitive advantages on large, complex projects that it can scale, one of which it believes is RNG. Chevron and Brightmark, an RNG project developer, recently announced an expansion of their RNG joint venture. Royal Dutch Shell recently outlined the details of its near and long-term cleaner energy transition plans, stating that its oil production and carbon emissions have already peaked, and it is now aiming to reduce its net carbon intensity by 100% by 2050. Natural gas utilities in the U.S. continue to introduce RNG into their grids for residential and commercial customers. Utilities in Minnesota, Michigan, and Florida recently announced plans to offer RNG to customers after RNG service tariffs were approved by state utility commissions, a trend that will continue to support the growth of local RNG development and production. Renewable natural gas is rapidly shifting from a niche fuel to a mainstream substitute for fossil natural gas, allowing natural gas utilities to offer a net zero carbon energy option to customers while remaining competitive with the electric grid. So, you would think, after posting such a great earnings report, and with all of the great news surrounding the company, that the stock would have taken off on Friday. Nope, the exact opposite happened. The stock got absolutely whacked, falling almost 9% on the day. This is why it is important to understand what you are investing in. If you see one of your stocks fall 9% in one day, but have no idea what is going on with the company, there's a good chance you'll get scared and panic sell out of your position. However, when you know it's a great business that has global exposure and is currently the largest player in a rapidly growing and essential industry that just posted record numbers, then the dip in price is nothing more than a prime buying opportunity. Nothing but great news, revenue growing over 100% year over year, but you're able to get shares at 10% less than you did the day before. Sounds like a deal to me. Their numbers are really good too. Greenlane only has a $268 million market cap with a forward PE of 50 and a price to sales of only 12. The forward PE is a bit high, but for a company that is currently focused on rapid growth and expansion, I'm not overly worried about their profitability at this point. That will come. They have plenty of cash to fund the growth, with over $16 million of cash on the balance sheet and only $6 million of debt. Given how fast this company is growing, both the price to earnings and price to sales will come down drastically in the coming years. Analysts predict that Greenlane will grow revenue over 100% in 2021 and then another 35% in 2022. I actually think the predictions for 2022 are low, given Greenlane's growing sales backlog of nearly $750 million and the global push to decarbonize energy production as quickly as possible. 6 analysts on Yahoo Finance have a 1.5 buy rating on the stock, between a buy and a strong buy, with an average price target of $2.76. a high target of $3.75, and a low target of $1.60. It's not just Yahoo either. If we take a look at TipRanks, the sentiment might be even more bullish. TipRanks is giving Greenlane a smart score of 9 out of 10, with 4 analysts giving it a strong buy rating. The low target on TipRanks is $3, while the average target is $3.31, and the high target is also $3.75, the same as Yahoo. Even the average price target of $3.31 offers nearly a 70% upside from the current price. In my opinion, this stock is an absolute steal at this price. If it goes lower, then it's even less risky and a better buy. Long term, I feel there is very minimal risk in this investment with enormous upside potential. I've added 300 shares of Greenlane over the last couple weeks and now have 900 shares in the company with a cost basis of $1.39, which makes Greenlane about 6% of my portfolio. I will definitely be growing my position to at least 1,000 shares. And if the stock stays on sale or continues to dip, there's a high likelihood I will grow my position much larger than that. No matter what happens with the market, I won't be selling my shares of Greenlane anytime soon. I'm almost certain this stock will provide significant returns for me over the next 5 to 10 years. What do you guys think? How are you handling this market correction? Are you going shopping too? I would love to know what you guys are buying and how you are handling this market correction. So please leave a comment down below. Well, ladies and gentlemen, I think that pretty much does it for this video. If you made it this far, I really do appreciate you. If you haven't already, please hit that like button for me and subscribe to the channel, as it really helps me out by letting YouTube know you're enjoying these videos. If you want to be notified of future videos, don't forget to hit that notification bell. Until next time, thank you for tuning in, take care of yourself, and keep investing wisely.